Crypto has gone through cycles, and when you have risk on, people are excited. They are, now you have kind of a risk off moment. There's uncertainty. I personally will echo some of the things Richard said. There are so many macro factors that are continuing to provide tailwinds for this industry that I think as we go into 2026, I don't remember being this optimistic in the last handful of years, where you do have, as Richard said, regulatory clarity in the largest economy in the world. And I think people underprice this.
I'm paying attention to on XRP. As we transition and we discuss and talk about the current backdrop, let's dive into why the current market cap today shed another over $90 billion at time of recording, why XRP's price right now isn't mooning, just like the rest of crypto assets and altcoins are down across the board. There is a fundamental and macro reason for that. So we'll read today's report thoroughly. Then we'll take a look at some updated analysis and just go over some levels to be mindful of in the coming days ahead, which pretty much haven't changed from the latest update if you guys are tracking those updates. But we will just touch base on that, and we will go over and take a look just at our lowest levels in terms of our institutional Delta and Dark Pool software that are printing. So we'll take a look at some lower levels, and then we'll also take a look right now at some higher levels just in case those do materialize and come into fruition. All right. So just to show you guys again in our community, okay, we have been talking about this for months now. And the reason why I do this is to show you guys that in this community, we think so far ahead, accurately and logically, that the rest of the retail crowd, when they catch up, by the time they do, it's already too late for their mentalities. At least unless they have the willpower to really change their way of thinking, most of them don't, due to the manipulation that we know exists on social media. So September 28th, 2025, okay, I was specifically talking about how a year ago today, markets were rattled by an unwind of the yen carry trade. Not on the September 28th, I was just sharing this article. And I was specifically talking about how if this continues throughout global markets, we're likely to see it weigh on risk assets. And in the comments of this video, I was being called a crazy person, a hateful person for saying that XRP is not going to moon because of this. And I mean, you guys could go and read the comments. It's embarrassing to say the least. Okay. Here's even a full 45-minute long video breakdown that we had uploaded, again, November 23rd, so over 2 weeks ago, specifically going over this exact same thing and saying how if this continues to materialize, it is going to weigh on risk assets. And if you go and you read the comments, same thing. I was being called crazy, all these things. I mean, it's nuts. But now, okay, now look at this. Now what is Yahoo Finance talking about? December 5th, 2025. Okay, that's today. Yen carry trade collision. Bank of Japan's rate shock aims at Bitcoin. US crypto news, right? So it's just insane to see that in real time here in this community, we talk about things that now mainstream retail fundamental analysts are going to start to talk about. And we had been warning about this for some time. So with that being said, that'll take us over to today's report. Market update. Why crypto sold off again today. And then we'll also take a look at reading the remainder of this report next week. Today, the total cryptocurrency market came under pressure once again as a combination of central bank uncertainty and renewed geopolitical tensions weighed heavily on overall risk sentiment. For weeks, we have highlighted that the yen carry trade and Bank of Japan policy shifts would become a defining macro theme heading into year-end 2025. Now, that thesis has fully entered into the mainstream, with major outlets like Yahoo Finance discussing the exact scenario that we have been prepping for months. And today, that theme is playing out in real time. One of the primary drivers behind today's crypto sell-off and the sell pressure in crypto overall this week is the increasing likelihood of the Bank of Japan's policy shift. Remember that markets like to price things in advance, right? That is important as we progress through this report. Hawkish remarks from Bank of Japan Governor Ueda earlier this week revived speculation that the central bank is preparing to raise rates sooner than expected. You can see it in the reports. It says here, traders ramped up their bets for an imminent interest rate hike by the Bank of Japan. This helps offset an unexpected fall in Japan's household spending, which declined at the fastest pace in nearly 2 years in October, and is seen underpinning the Japanese yen. Hawkish remarks from the Bank of Japan Governor Ueda earlier this week revived speculation of an imminent policy adjustment. Bloomberg reported earlier in the day that the Bank of Japan officials are ready to raise interest rates at this month's meeting. Markets anticipate a 25 basis point Bank of Japan hike on December 14th, with 2 additional hikes next year. And remember, I've played video clips from systemically important people saying that they price these things in global markets ahead of time, which is exactly what we're seeing today. The yen benefited from all of this week, building on the expectations for the Bank of Japan to resume rate hikes this month. Bloomberg reported that the Bank of Japan officials are ready to hike rates at this month's meeting, conditional on no major economic or financial shocks, while also signaling that additional increases remain possible if inflation and growth evolve in line with expectations. That is important because in the coming days ahead, we will definitely need to be mindful of any data on the Japanese front that could support or push back on the prospects of Bank of Japan rate hikes. This alone injects fresh uncertainty into global markets. Looking ahead to Monday, traders are going to be watching a slate of Japanese data. We have labor earnings, the current account, and the final Q3 GDP revision. These figures will shape expectations ahead of the December 18th through 19th Bank of Japan meeting. Markets now assign roughly a 90% probability to a 25 basis point hike on December 14th, with MUFG analysts expecting these dates are incorrect. I don't know why those are twisted. MUFG, that is a bank, analysts expect 2 additional hikes next year. This is important, potentially lifting the policy rate to 1.25% by the end of the year in 2026. Because coming into 2026, this is something, again, that we definitely need to be mindful of on how aggressive or how hawkish the Bank of Japan becomes, and if that leads to any yen strength, which could possibly lead to any unwinding of any yen carry trades. Now, I'm hoping, based off of previous unwinding of yen carry trades, that central banks have positioned certain mechanisms traditionally in finance to kind of soak up the shock that this could cause. In previous BIS podcasts that were shared in this community, we've heard them say that they are prepping for the unwinding of the yen carry trade, and there is a possibility that they could cushion the shock that it would cause. So hopefully, we've already seen those things implemented and put in place. And all of this is, realistically speaking, just uncertain speculation, and the market recovers, and we don't really see any major turning of events, right? But we still have to prepare for the worst case scenario. With that being said, Ueda's language this week, particularly the use of the word uncertainty, which we know whenever a central banker says that word, especially a head central banker, we know that the markets tend to react very negatively. You guys have seen that in real time with me when Jerome Powell comes on stage and says, "Good afternoon, everybody. Right now, we see a lot of market uncertainty and the markets take a piss." Okay, so that took place this week, but from a different major central banker, Governor Ueda. He said specifically, there is uncertainty on how far we could eventually raise interest rates. This is the exact kind of macro tone that crypto historically reacts poorly to. Meanwhile, Japanese yields continue to climb. The 2-year JGB has surged above 1%, a level not seen since the 2008 financial crisis, while the 10-year yield sits at a 17-year high. This matters because the yen carry trade has been a core pillar of global liquidity for nearly 3 decades, where investors borrow yen at ultra-low rates, convert it to dollars, and deploy that capital into higher-yielding assets like U.S. stocks, bonds, and in some cases even crypto, especially leveraged crypto positions, especially for Asian traders. When the yen strengthens or Japan raises rates, this trade unwinds aggressively. We saw that play out back in August 2024 when the Bank of Japan hiked rates that erased over $600 billion in 1 week from the crypto market in a single session that took place. And over the course of the week, it was over $700 billion. That sent Bitcoin sharply down over $1 billion in forced liquidations. Now, one thing I want you guys to pay attention to is that if markets are pre-pricing a rate hike now, which we can clearly see in the fundamentals, which is why I highlight these things for you guys, okay, being realistic with you all, as that if the markets are pre-pricing in a rate hike now, there is a potential for a sell the rumor. So they're selling the rumor that the Bank of Japan is going to hike rates and it's going to create a massive yen carry trade unwind, but then it results in a buy the news. So when the Bank of Japan does actually hike rates, if we don't see any major unwinding of carry trades, they're able to, control any major liquidity shocks or anything of that nature, and it's not really as bad as what the market had perceived, then it's probably going to turn into a buy the rumor, a sell the rumor, buy the news event. That means that worst case outcomes may already be baked into the current market conditions. On the flip side of that, the only pessimistic side of that I see is that if the Bank of Japan surprises the markets with more hikes than expected or more hawkish rhetoric as we head into 2026 than expected, that could be an environment that has not been fully priced in and could unwind carry trades further. That reaction could be violent. Crypto being one of the highest beta risk assets would likely face a significant intraday painful environment if we saw that. But I'm still throwing an optimistic outlook to you guys because we know right now that in terms of the fundamentals, they're telling us investors are pricing these things in. They're already anticipating it. So maybe that's what we're seeing right now. And maybe once they actually do hike rates, it's not as bad as everybody thinks. And we see risk on return. So definitely be mindful of that in the coming days ahead. On top of that, today, the second major driver behind today's sell-off came from geopolitics. Earlier on this week, markets responded positively to signs of progress in peace discussions between Russia and Ukraine. That optimism evaporated today. Russian President Vladimir Putin issued some of the firmest warnings yet, stating that Moscow will forcibly take Ukrainian territory if Kyiv does not withdraw its troops, directly undermining hopes of a negotiated settlement, which we saw flourish at the beginning of the week. Everybody was hopeful. Bitcoin had a nice little surge back above, I think it was like 96K or something like that. And everybody was like, oh my gosh, peace negotiations. And we in this community specifically mentioned in our fundamental chat that if you look under the hood, the announcement of a ceasefire or peaceful negotiations between the two jurisdictions isn't as optimistic as everybody was making it out to be. And now, fast forward to the end of the week, we were correct on that analysis. So pat yourselves on the back if you guys were chopping up with me in the fundamental section and not being like super driven by that narrative, because here we are and it's literally just hurt risk sentiment. His comments today followed a 5-hour meeting with U.S. delegates Steve Witkoff and Jared Kushner. Putin made it clear that Russia rejected several key components of the revised U.S. peace proposals, that negotiation still remain difficult work, and that territorial consequences remain non-negotiable from Moscow's perspective. Experts echoed the sentiment. Analysts from Oxford and RUSI both stated that Russia sees no incentive to compromise while making gains on the battlefield. I don't mean to laugh, but because obviously, of course, it's a very serious situation. I laughed more particularly because you saw how at the beginning of the week they were hyping the crap out of this, but now fast forward to today, it's literally just a nothing burger. So this just goes to show why you don't just read Watcher Guru headlines, because if you go back and you look at all the Twitter Watcher Guru headlines, breaking, Ukraine ceasefire Russia deal happening now, Bitcoin to 96K. But if you actually went and you read the CNBC or the White House reports, you'd see that these types of vocabulary words clearly show the opposite from the headlines. So now that you guys know what has weighed on current market sentiment, there was a couple of other different factors, but these were the two primaries. Markets pricing in high probability above 80% that we're going to see a Bank of Japan hike next year or next week, or excuse me, in the coming days ahead, and geopolitical uncertainty. Couple that with obviously, of course, the upcoming outcome of the FOMC press release and the Fed interest rate next week. So what to watch in the coming days ahead, especially heading into this weekend. Heading into the weekend, markets will continue to remain sensitive to any surprise comments from Japanese finance ministers. Any tariff-related headlines are definitely still going to be on our radar, as we still know negotiations are taking place between Congress and Trump and that whole uncertain outcome that could unfold and create a catalyst heading into 2026. Any geopolitical developments in Eastern Europe, especially around Russia, Ukraine, and any shifts in safe haven demand and flows into the dollar, yen, and bonds, which we won't know until market opens Sunday evening, Asia session Monday morning. Any unexpected macro shocks could add further sell pressure to crypto while uncertainty remains elevated. Next week, attention will shift back to the US as the Federal Reserve prepares for its final policy meeting of the year. Right now, markets expect a third consecutive 25 basis point cut. I think that after the labor data and after the inflation data that we got today, that is a laggard from September, I firmly believe that they will cut rates. Markets right now are still pricing in an 87% chance of this outcome taking place, and they're also penciling in 2 to 3 cuts for 2026. This is important. I think this is going to be one of the key drivers of next week's sentiment right here. And that is, does the market continue to pencil in rate cuts early 2026, or do we see a pushback on that via the rhetoric from Jerome Powell? That means our key focus next week will be the Fed's forward guidance. If next week Jerome Powell supports a 2026 rate cut with dovish rhetoric, we could see the markets recover into 2026 as they start to price that in. However, if the Fed pushes back on rate cuts, dwindling the market's current hope for 2026 cuts, we will likely continue to see sideways pressure or even further or even further selling as larger participants continue to rebalance their books before next year. We also have a wave of key economic reports delayed, the government shutdown, that will also be released, including JOLTS job openings, September trade deficits, wholesale inventories, Q3 employment costs, NFIB, business optimism. This is going to be important, along with the delayed labor data. Inflation expectations is definitely going to be important. And then obviously, of course, weekly jobless claims and ADP. And if you're a futures trader, don't forget we do have some earnings reports next week. All of this will shape the Fed's update and economic projections. So if all of this data, even if the Fed cuts rates, right? And I'm just throwing out hypotheticals here, even if the Fed cuts rates next week, but all of this data comes out, plus all the laggard data from September and October comes out and pushes back on the rate cut narrative heading into 2026, we can already assume what the outcome is likely going to be. Say bye-bye to all those bullish Moonboy December price predictions. That ain't happening. Okay. Inversely, if we can see cooling in the data, deterioration in certain figures that support rate cut bets heading into 2026, lower inflation expectations, so on and so forth, and a full-on data narrative that supports continued easing heading into 2026, yes, sure, a recovery is possible and back on the table. Mind you, again, we still have other things lingering on the backdrop that we need to overcome, but this would still be something that could support a possible recovery. Monday, also, don't forget, we have that critical Japanese data. We have labor earnings. That's going to be the most important thing outside of the final Q3 GDP. So to wrap this up, these prints will heavily influence expectations going into the December Bank of Japan meeting and may significantly shape global risk sentiment and tone early next week. As of recording, the total cryptocurrency market has shed $89 billion and is trading back near its weekly lows. Excuse me. With macro headwinds intensifying on multiple fronts, volatility is likely to continue. Risk assets may remain fragile until central bank clarity improves, geopolitical tensions ease, or markets finish pricing in the unexpected Bank of Japan tightening cycle and get a certain outlook for the Fed's forward guidance. With that being said, now that you guys are aware of the current market sentiment and the environment and what to pay attention to in the coming days ahead, real fast, just taking a look at primary levels I'm paying attention to on XRP. If we break below $1.90, which I will start to consider possibly reaccumulating some more XRP at $1.90, if over on the order flow, I can see that buyers are interested at buying at these levels again by seeing trapped sellers on the lower time frames and buyers becoming aggressive after they trap those sellers. However, if we do fail to break $1.90, the next immediate area of interest on my personal radar for some accumulation targets on XRP is $1.56 at the institutional buy dark pool. To the upside, I'm not expecting any higher prices or major recovery on XRP until we turn $2.33 into support. We have a major aggressive seller here that exists at this sell dark pool. And we can see here that buyers made an attempt to break above, On the order flow charts, they've gotten trapped. Here, you can even see another buyer making an attempt to come and break above this aggressive seller at $2.33. They got trapped, failed, and yet again, we had another spike up into roughly around the area of interest, this sell dark pool, and buyers just continued to get trapped, and sellers continued to throw up passive volume, become aggressive, and defend against the buyers. So for now, until we break above $2.33, I'm pretty mute on any higher prices on XRP. In my personal opinion, without a sustainable break above 233, I'm honestly leaning more so towards lower prices on XRP. Either a revisit of $1.90 or a possible even lower accumulation target of $1.56. If we break $2.33, I will flip back optimistic. That'll open the door for a recovery to 263, which is our next sell delta above the 233 area of interest. I will give you guys an update most likely before that comes into fruition. So we'll pause there. But I won't leave you guys without an update on the deltas. So with that being said, to the downside, taking a look at the lowest levels on the deltas, you can see that the lowest level delta comes in at 73 to 81 cents. So that is something definitely for sure to keep on our radar as a possible outcome. Obviously, of course, we would need to see massive amounts of sell pressure, fear, uncertainty, and doubt take XRP's price below these two dark pools before that even materializes, but still nonetheless something that has popped up on our radar. To the upside right now, the highest sell dark pool comes in at about $3.28. Like I mentioned, that $2.63, if we ever do recover back to that in the coming days ahead, is going to be a major hurdle for buyers to break above, turn into support before we even consider revisiting 328. So now that you guys have those updates, that is it for the current environment XRP technical analysis update. I gave you guys the backdrop to kind of lift the sentiment today for the future, heading into some things in 2026 and beyond that we're not going to want to miss out on, which is institutional floodgates opening for having regulatory clarity, first time ever in history, and more of the population adopting these digital assets. One thing that Brad Garlinghouse mentioned, obviously, of course, the risk tone, but that these institutions are about to start scaling in small and then over a prolonged period of time.